And I think we do as we did before. In the last call, if David would kindly talk through again, and then we can jump on with Aaron and Justin with specific questions. And obviously, Justin, we had Aaron, just in case, I'm sure you do know this, but we had this same call with Tony earlier on. So Justin's been through quite a bit of this as well. So primarily then for you, to ask the questions, but we've underlined before, but I think you'll see now when you start talking with David, it is complex. So it's not just a sort of a question of a series of sort of processes that lead to a conclusion. It's options of different things that can be done at different times. And David will give us a flavour of what those different things are, and then we'll need to work with David to send them, build up those, the configuration of those things to get to the solution you want.
All right, now I'd sent through that spreadsheet just to try and summarise my understanding, so I'll just have that sort of working in the background as we talk, so I can take notes against it.
Should I do a quick thumbnail of how I got to the platform on this call? Is that useful?
Yeah, if you could provide an overview, David, that'd be good. And then we can go through kind of procedurally what this platform looks like and dive into some of the specifics around it from the risk standpoint and the timing and all of those aspects that we covered.
Excellent. So I'm David McElroy. First Fusion Capital is my company, founded in 2016. I come out of 30, 40 years worth of finance background, starting in traditional single-family real estate, and I've had real estate companies, I've had mortgage companies, work for majors. In 2016, I wanted to get into commercial. And I wanted to do not just banking types of commercial, but the more alternative funding. The challenge that comes with that is 99% of the alternative funding space is peopled with incompetence and fraud. So I went through an exhausting task of finding the platform that I'm with now. It was brought to me by a friend. He and I and a dozen other people were taken advantage of by a platform that never worked. But we became friends. He introduced me to the founder of this platform, and he had immediately been successful with them. So I brought all my friends that were in the previous experience of exhausting failures to this platform, and we're all very excited and what can be done. Think of the platform rather than what we might see in a traditional banking sense, where they have a program, where it is a box of Legos. And depending upon how much capital a company already has, what their funding need is, and then what the timeline for that funding might be, we can put together a specific series of solutions that aren't always the same. A solution for a particular developer with their timeline may have components in it that for someone else, they either wouldn't understand one of the components he selected, or they wouldn't be comfortable with it. But the result is, how do we get the funding you want with the least amount of dilution to what you're doing? Because obviously when you're raising capital, that's the hardest part when you're raising cash. And the more of it you raise in this environment, which is hard, the more you have to give up to the point where it waters your project down to, you're wondering, why am I going through all this work if I'm giving up that much of it? So our programs are set up to be capital multipliers. So I'm not the guy you'd come to if you want to raise seed capital. I'm the guy you come to if you've already got money and you want to advance your project with that money. And depending on the amount you have and what your timelines are, we can go down the risk parameter. It's always managed risk. It's never like riverboat gambling type of risk. But to get higher yields, there are greater risks. The simplest program that's most bank-like, because banks are involved, is the multiplier program. It starts with a minimum of 1.2 million. It takes, they say, 60 to 90 days. One of my clients got it done in 2 weeks, so timing can be part of it, but let's just say 60 days. He put up $1.2 million. $1 million of it was a deposit in the bank in the name of his company. 200,000 of it was insurance on that deposit. so that it can't be lost. Even if the institution failed, and the unlikelihood of that occurring, he'd still get his deposit back. And he had a project that made economic sense. So we can't get funding for anything in the multiplier or bank type program if the project doesn't make economic sense. So the project made sense. In the period of process time for him, he put up his $1.2 million insurance plus the mill. We got him a $5 million loan. The platform and the institution take 20% of that as their fee. So $5 million is now netted down to $4 million. The terms of that loan is 0 coupon rate. So there is no interest rate on it. It's a 2-year term. My client, in the example I'm sharing with you, real estate developer, took the $4 million he had net and he rented courtesy deposits to go in the same institution. The charge for a courtesy deposit is 7%. So if you want $1 million deposited in the institution, so the institution can leverage that money and be willing to lend you more, you'd pay 7% of that face amount. He spent the entire $4 million to get about $71 million worth of deposits placed in that institution, not as collateral, but the institution can use it in fractional reserve banking to get more loans and make more money by doing the spread.
So the institution turned that into 71 million of.
The investors put the deposit of $71 million in CDs in the institution, in the bank, and the bank then was willing to lend my client an additional $54 million.
Right. So the bank called in 71 mil based on the 4 mil that was there.
Paid in fees to get those deposits placed there. Call it points if you want to.
Yeah.
And now he's going to do several other things that we won't go into in this call to generate some income. If he wanted to, he could have gone straight into a trading platform, which is more complex than this and has significant yields. But this was most bank-like to him, and it had risks that he was comfortable with, and it's working out nicely for him.
So let me just step through this. So he started with 1.2. The 1 million is at risk.
The 1 million is a deposit, like a CD in the bank where he got his loan.
Yeah, but that's at risk, right?
Yes.
Yeah. No, that's okay. I'm okay with risk. Obviously, I make circular wave pool, so it's So the 1 million deposit. So they got a 5 million loan from the same bank.
Yes.
Okay, and then they took that 4 million. Is that right? And then they actually called investors in on that at 71, but they loaned him 54 as a result of ultimately 1 million that he's put in there.
Yes, and secured by a real estate project so that it makes sense. The bank has to underwrite the project. It has to make sense or they can't make these loans.
Yeah, that's
so
right.
It's secured. This is
real estate. Yeah.
So it's secured by the collateral, David, and then what does the 200,000 in this sequence? I want to make sure that Aaron understands.
My client's attorneys wanted his deposit to be insured in the institutions in Canada, and the government insurance covers 100,000, so they'd be 900,000 short. So they went to through the platform an insurance around that deposit, so that even if the institution failed, they'd get their $1 million back.
Okay.
How much collateral was he based? So the 54 mil. So at this stage, he's basically put up 1.2.
And he's brought real estate projects to be underwritten to serve as collateral for the loans as well.
Yeah. And do you recall how much collateral that project was? Was it 100 million?
It had $54 million. Well, I'll take it a step further. In his case, he's got a very successful multifamily real estate development company that's 3 generations old. What they allowed him to do was put up stock in his corporation as a global lien, so the individual real estate projects would not be encumbered. The reason he wanted that is in Canada, he can get 4.5% institutional money on the underlying multifamily because they have such a need for it. So he didn't want to give up that 4.5% long-term money. So they let him put up his corporate stock as collateral. But in a simplified version, the real estate project would be the collateral itself.
No, that's fine. So, but the ratio of that is what I'm getting at. So in our case,
the ratio would probably be 80% if we were going to just pick numbers out of the sky.
Oh, okay, right. So you're not after 150 million collateral value,
right,
on 54 million.
We'll call it equity value, right?
Yeah, that's right. Yeah. All right. So just quickly get my head around it.
Also, something
so
good
might
for
be a 67.5 million at 80%, 67.5 million of real estate or the project to get the $54 million loan, based on 1.2 cash.
In those deposits that were put up, that 71 million, they're in the bank, but in the name of the investors, and they aren't encumbered by the loan transaction. They won't put up the money if it's going to be encumbered.
Yeah, gotcha. And what are those investors getting? 7% return.
They're getting the 7% points. Plus, I'm thinking the CDs are probably at 5.25%. So they're getting the 5.25% for the 2 years. Plus, they're getting 7 points at the time of placing the deposit in the bank from my client.
Yeah. Okay.
And just to be clear, Aaron, we talked through this with Tony. There's a narrative that David's going to provide on this as well, just to clarify what we're talking about.
And as I said before, it's not the only solution. It just happens to be one that's been very easy to explain. So I've used it over and over again. There's a currency trading platform out of Hong Kong that's been very successful for some clients. That's a good piece of their puzzle. There's a standby letter of credit and short-term, long-term, medium note trading platforms that's had great success. Those, of course, don't need collateral, right?
Yeah, that's right. Yeah. So, but again, different risk profiles, right? So
yes.
So, but I'm just getting my head around this. So 1.2 in this case. So you got effectively it's a 2.2%, or a 97.8% loan backed by the real estate project, though, at 80% collateral.
Yes.
80% loan to valuation.
You probably can already go here in your mind, but some of my clients have been raising LP. What they've done is they've gone to their investors that will put up the LP and say, hey, listen, we don't need your money for 5 or 7 years. We need it for 90 days. And we'll pay you this interest for 90 days, and we'll pay you a point of the project, whatever they negotiate. And then you get your money back and you still have a piece of the project. So it's giving less dilution to the clients who are the developers, and it's giving a quick cash back to the LP partner. And my clients, most important, gets the LP guy out of the equation, so they're not answering to anybody anymore.
Yeah, so the LP guys put up the initial cash.
Yes.
Is what you're saying. Yeah. Okay. Now that makes sense. I'm just trying to understand from the bank's perspective why they need to go through that and don't just say, here, give us X and we'll give you an 80% loan. But I guess
what they're looking for. Yeah, they're looking for deposits. That's what's driving this particular group of banks. They want deposits in their bank. So this program gives them the deposits that they want, because in fractional reserve banking, as you're well aware, let's make a simple number. They put money in their central bank and they get a 10x on that money, and they got a spread when they lend it out.
That's it. Yeah. So, okay. So that's really the driver of it.
That's what's driving them. Yes.
So it means that they're willing to be a little more commercial, take a risk on projects that they normally wouldn't. Is that the?
Yeah, I would say they don't want bad projects, but they're willing to be more lenient with the right management team.
Yeah.
You're always going to look to the
one question, David.
Yeah.
The first phase loan with the multiplier, that's a 2-year loan. I assume that with the phase 2 loan, with the CDs, the project could be a 3-year project or a 4-year project.
Yeah, in fact, in that CD program, they'll do long-term. They'll participate in long-term loans where that money would be there for a longer period of time. Again, it's not collateralized with it, but there's an agreement with the bank. It'll be there for a period of time.
I just wanted to make sure that that was clear. It's only the phase 1 loan, the multiplier, that's 2 years.
Yes.
The full
phase 2
CDs is
The terms are going to vary depending on the borrower.
Yeah, that's understood.
Yeah.
So there was one statement there about a 20% fixed on, say, for example, the 54 mil. That's an example place.
No, the 20% is on the phase one, on the multiplier, Aaron. On the second phase, where David's talking about a 54 million loan, that will be on commercial terms with, an interest rate over prime or whatever.
Yep. Okay. I understand.
The 20% only applies to the multiplier loan, which I think David will tell you, some of the clients repay that loan from the second loan. They build sufficient in to repay that loan.
Some of them even pay back their investor with the first loan, right? Get the investor out of the picture. The deposit's still there, but the investor's out of the picture.
Yeah.
Okay, no, I understand. So,
and yes, part of the 54 million can retire the entire first loan. The only question you'd have is if there's a cost of interest on loan 2, why you would use that money to pay off a zero interest loan since you already paid your points.
Yeah.
Okay. So the next question was term. So you talked about longer term. Is that 5 years, 10 years, 25 years? I mean, what sort of terms?
Yes, it can be all of those, depending on the project.
Yeah.
What's been very common is probably 10 years. Maybe an amortization that has a longer amortization, but it's due in 10 or something like that.
Yeah. And what about refinancing? So, if we did it over 25 years and then after, 5 years, the project's going, as well as expected, and we're thinking, what, we can get a normal bank here in Australia, for example, or in America to finance it out. What are the penalties for refinancing that?
None that I'm aware of at this time.
Yeah.
No prepayment penalties, in other words.
Yeah. Well, that's good. They even give you prepayment penalties on a mortgage or a car loan.
And of course, remember, every time these guys do a loan, there's fees involved. So in their business, turning it's okay, right? In fact, if those CDs are deposited in the zero interest loan for some reason we can't predict, that paid off in a year, and now all their deposits are freed up to be put back out in the marketplace and do whatever with, that's probably a plus for them.
Yeah, that's right. So they can't lose. They set it up so in or out they can't lose, and that's fair. Okay, well that starts to make more sense now. So really, the question for me and our team is, putting together what we have as an IM and the business plan for this project to help explain our business and the property value now and after money, so that can be considered seriously by your crew. Now the question is, in our case, the first project that we want to do as Surf Lakes Holdings, which soon to become a US Surf Lakes Global, we've got the one in Australia here that's fully approved, ready to go. Just we're raising capital now. Is an Australian project going to be realistic, or would it need to go through the US Topco, who then do a sub loan to our Aussie project? What's your thoughts on that?
We can do projects all over the world. We can do them in any. Really, probably the prohibition would be not to do it in a communist country, is what I would suggest, or one that's currently at war, right?
Country, so that's good.
I mean, maybe if we wander down and decide whether or not it's something in between,
I'm really happy with our democracy here, but it is a democracy, so we'll still play.
Yeah.
Yeah.
I mean, I know some people that think California is a communist country, so it just depends who you're talking to.
Yeah. No, that's fine. Okay, well, that's good because, I haven't presented what we're doing. Have you seen any of the decks from Surf Lakes? Are you aware of what we're doing, David? Or should we do that another time? I'm just conscious of...
I think you've seen that one, David.
I have indeed. In fact, let's say we're in the exploratory part right now, right? Where we're kind of saying, should we dig into this? Does this bear an investigation? So what I found is after we get through this preliminary and someone says, yeah, this is worth digging into. Then what I recommend is that we do a consulting call with the founder of the platform. We get to talk to him directly, the guy that put it together. All these relationships are his. He charges like $300, less than that, for a 45-minute consultation, and then he'll give you a credit towards your funding for that 300. He put it in place because as he got more and more popular, he spent all day long talking to people that couldn't buy a box of chiclets if you gave them $50. So he wanted to get rid of that element, and this does that. So I would send out a booking link, and then he would send out to all parties that's in the email. Let's say all of us that are on this call or whoever else would be there. They'd all sign the appropriate non-disclosure, and then we would have a video call with him. And I found that after that call, it's almost like the whole world of wonder opens up before you when you realize what's available. And then you get closer to, oh, okay, this is the direction we want. We want these parts plugged together in our Lego package. And then the next step would be getting in the various attorneys and those things, and agreements issued, joint venture agreements, all the things that you would want with any business deal of this size.
So, no, that's perfectly fine. You know, I chuckle, we have been caught before with an Australian guy, but that was, you know, against my advice to the board. So I've got an I told you so there. But, yeah, this seems far more organised and legitimate. So that's good. Just what I want to check through the process there. So, you know, that first phase one, now my assumption is this whole, you know, project would be laid out, you'd agreed in principle. Is there a risk that they won't get those investors? So even if we spend, you know, 1.2, you know, the loan happens for phase one, and they come back to say, well, actually, we can only give you, you know, 30, not 54. Like,
they wouldn't take the deposit if that were the case. So everything is predetermined before they move forward.
That was the question. Yeah. Okay. So it's pretty much a foregone conclusion that if you're going to take the money, the program is ready to roll out.
That's correct.
Yeah. Okay. Awesome. Well, yeah. Let's have the call. I guess what I need to do to go back to my board and team is then, you know, I guess a full proposal, step by step. This is how it plays out. And but you know, we'd need to share with you the you know, our information and formalities on the project here that we're rolling out. But what it gets interesting to me, as Justin probably pointed out, you've already spoken to Tony Miller. There's 18 projects signed on globally with either a deposit or a full license. There's another 40 in discussion, and really the key question now is funding. You know, what's the best funding mechanism now, medium term, long term for these projects? And so there's institutional money coming into the surf park space because it's essentially a sexy property development with waves. But in our case, you know, we don't have one open commercially yet. So this will be the Appoon one can be the first commercial opening, and it's backed by the 100 acres of property development that goes with it. But yeah, the industry's already proven in a sense, and we've got what can be the most productive and profitable technology. So everybody's getting excited, but there's that sort of risk with it. And so for us, we understand we have to, you know, explore all options to get that first one up.
Of course,
being in Australia, it's, you know, it's the land we already own. It's already dug, so it's 55 million Australian, which is 40 cents for America. It's not so bad. But but it means it's not the $4 billion mega project in Vegas we're trying to fund, right? Like, they've got a little bit carried away there. But
and as you can imagine, this is the first thing we're doing together as a group, all of us. Once you bring the platform in, and then we do deal 2, 3, 4, and 5, there'll be some changing components, but we'll have the system in place. We'll have trust. We'll know one another. My friend up in Canada, he'll go and talk to the platform owners and the various bankers just like they're his neighbors, because he's gotten so used to doing business with them. That's where we want to go with this.
Yes. Yeah, great. All right. Very good. That makes sense to me.
Okay. So I think just to follow suit with what we're doing with Tony, Aaron, is to set up a follow-up call, as David said, with the kind of founder of the platform to walk through the opportunity and the options that are available, and figure out what would be the most appropriate way forward. And I think, given the context of this, you know, your path forward will involve some variables that are different than perhaps Tony's and others there. But it'll give us a much clearer picture outside of the hypotheticals that we're talking about right now. Also, I think the narrative, David, when we get that from you, will give us a better picture of kind of our mindset going into this. Obviously, the multiplier aspect, phase one of this, makes a lot of sense. It's very straightforward, kind of down the fairway type of approach. But figuring out how to build in that phase two aspect of it is where I think the rubber meets the road in terms of what's different for each individual client base. So
I've got a client now that's taking their phase 2, 3, and 4 from a $40 million raise. They're going to end up with $460 million. So the complexity of their path, the timelines they have, are substantially beyond what we've been able to discuss in this call.
Right. I think that's something that we would get into. So long story short, the next call will be very useful in terms of identifying if this is a viable option going forward for Aaron as well as Tony and particularly other leasees down the road.
Exactly.
Yeah.
Okay.
No, very good. No, I look forward to that as soon as we can have that clarity, and then it's we can start introducing you to the other projects perhaps as well. Because my understanding is it's only going to help by having others involved. I don't think it's going to be causing Tony any grief by having others there, because it's not a competition. There'll be, you know, in theory, the pool of money is far larger than we need.
And it opens up doorways to a bunch of people you don't even know now. And
Correct.
Knowing people introduces you to other people you don't know. It just expands from there.
That's it. And I guess, as I said to Tony, and he's approached me on the same thing, if we collectively, as you know, as Surf Lakes and a group of licensees, you know, can provide some critical mass there, it just helps the whole discussion and narrative back to your team and the platform as well, that they understand it's not just a one-off. There's a rollout of projects here which can help everyone.
That's really where the reward is. It's the follow-on, the larger picture, the bringing the groups together, even beyond the projects we're talking about now, to all the people we know in the future that might want to associate with us. I'm talking to some of my friends now about us setting up our own platform. And so we can help some clients totally, but other clients will be beyond the scope of what we're capable of doing. So we'll bring them into the bigger platform. So we're open and receptive to other financial partners as we all grow together. There's plenty for everybody.
So just a very quick one. The perspective that I have of this, the industry, just the surf parks, is if you go back to the ski resorts in the 30s, they were fringe dwellers who climb mountains and jump off the snowy mountains. Now, with the tow bar and the chairlift invention, there's now more than 6,000 ski resorts and 550 in America alone. You know, so it's a big industry. What we've created, particularly with Surf Lakes, is the surfing equivalent of that. We've created the mountain and the chairlift, and they don't have to be on snowy mountains. You can put them anywhere in the world. So our perspective on where this can go is that in 20 years, there should be at least 1,000 surf parks out there. And we believe that we can be the category king in that space. So it's a question of market share with the technology we have now, because it is bigger and more productive. We see at least 100 of ours in that time. With the developments that are coming, I genuinely believe we can get another 400. So there's more than enough future in this, is what I'm saying. And you only have to look at golf course proliferation as another example, and the indoor ski parks, which are like 250 million, and there's 108 of them either built or in planning, and they're just an ugly big box that you ski inside. Ours is far more attractive. So it's not foolish for me to talk about 1,000 surf parks, because everyone I speak to sees the same thing. That we get it. It's where it can go. And
Yep.
every single one of those, will need financing. They'll be looking at the various options for themselves. So that gives you an idea of what hopefully is still a conservative claim, but that's where it can go in the near term anyway.
Yeah, I like it. I like there's huge opportunity for all of us.
Yeah. Cool.
Okay. So we need to look out into next week.
Yeah.
And see what type of availability we have. So I would say, David, if you're able to provide a few select.
What I'll do is I'll send his booking schedule in the link. You guys
Okay.
decide as a group based on his schedule what you have available. And then whoever's going to be on it, me, everybody, include them in the invitation email that goes out to the platform. And they'll send all the appropriate disclosures to all the parties before we do our call.
Yeah.
Got it.
I'll bring in Ruben, our co-founder, and he's heading up the cap raise for us as well. Next, all going well, I'll be on a cruise ship going to New Zealand. But by Friday next week, we'll be in New Zealand with hopefully good phone signal as well as a ship signal. So early mornings, I can still take these meetings. So my wife understands it. So for me, earlier in the morning, the better. So what is
you'll have plenty. I just looked at his calendar a little earlier today.
Yeah.
There's plenty of spaces there for that 45-minute piece.
Yeah, cool. All right. No, that's great.
And what
I'll do is bring in Ruben and maybe another like Lewis, our COO, as well, so that if for whatever reason my signal fails, it's irrelevant. You can still have the crew there having the real discussion.
Yeah.
Sounds good. And we'll be flexible with your time frame, Aaron, obviously knowing that we're all in different time zones. Just pick a time that works well for you and we'll adjust to it on our side.
Yeah, okay.
Okay.
Yeah, so I think though early morning Australia and New Zealand is useful for the UK. It's certainly useful for the US. So the earlier the better for you guys, and I'm happy with that. I'm up at 3 or 4 every morning just because of the nature of the time zone. So if it's 3 a.m. for me, that'll be fine. I'm not sweating on it.
Sounds good.
Sounds good.
Right. Thank you guys. Appreciate your time.
Okay. All right.
Well, thank you, gentlemen. I appreciate it. Looking forward to the next step. You all have a wonderful whatever part of the day is left for you.
Okay.
Thank you.
Okay. Thank you.
Thank you, David.
Right, bye.
Thanks.